Welcome back, friends, to Alpha Beta Soup. I'm TXMC. I hope you had a lovely Easter weekend. Today we'll look at the Bitcoin price chart, we'll look at the equities price charts, and I'll show you some observations on chain related to long-term holder spending and exchange balances that I think are interesting and relevant to the market. So don't go anywhere. If you enjoy this content, make sure to give my video a thumbs up and subscribe to the channel. This is your home for Bitcoin and on-chain analysis. I'm grateful to all of you for your support. Now let's get into it. In my last video on Good Friday of this past week, we talked about price dipping down below this parallel channel and where we thought the low could maybe go. I talked about this level here, which was the 2-year median price. It's a place that I had found had given us some decent support, and it's part of an indicator set I use to go level by level when I'm watching price action. So we talked about how I thought that was a good landing spot for a deviation out of this channel. Well, what do you know? We've pretty much gotten that here. Now the line was down at 38.3 and we got, I think, 38.5. Now this move might not be over. We might still have a bit more jockeying for position, but what happened is what we thought would happen. So I'm feeling good about our assessment thus far. Though, like I said, it's still early on Monday and the markets have not fully made their presence known. So we'll give this time to play out. But in the short term, I am watching for maybe an additional deviation here below 38,000 perhaps, similar to these wicks we've gotten back here. Now we did talk last time about this kind of 37.5 level here, and that if price action started transacting down here, that might be a lower low kind of structural invalidation for this channel here. Probably wouldn't want to see that just after what we've been through, after seeing how difficult it's been for price to get out of this range here. It's probably a safe bet that we don't want to really threaten structural lower lows. That's not a good idea in this environment. So I'd like this level to hold, this kind of 37.5 level. We'll have to see how it plays out. And on the indices side, what I was watching last night when the CME futures opened was to see how Bitcoin was performing alongside the equities. Well, this first red line on each of the charts here is when CME opened last night. We can see Bitcoin and all of the equities, they kind of did a little dip sideways move here. Well, Bitcoin took a massive dump last night. And before I went to bed, I was wondering if maybe the equities would follow suit. Well, they haven't. They've all kind of held their own. This seems to be isolated to Bitcoin. And now here in the early going on Monday, it's 9:15 a.m. local time as I'm recording this. We're seeing a bit of a curl here off the lows for all the major indexes and for Bitcoin. Now, I'm not going to prognosticate just on this little amount of price action here, but the takeaway is that none of the equities dumped the same way that Bitcoin did. So this doesn't appear to be an endemic market-wide reaction to anything. It seems to be isolated to Bitcoin specifically. Pivoting to on-chain, because this was really something I wanted to talk about with you guys today. We're looking at the long-term holders. Now, this is a cohort that people pay close attention to. They tend to oscillate reliably at points in the cycle, time after time. And seeing as how they represent a more mature type of hodler, we do pay close attention to their behavior throughout the cycles. And what we've looked at recently, we talked about this a bit on the live stream last week. I'll leave a link in the description if you still haven't watched that. But we talked about long-term holder supply. And one of my observations, here's the supply in this gray area chart right here. As we got up to the all-time high in October, long-term holder supply went sideways and has softened. And the spending coming out of this group is mitigating any coin maturation that would cause long-term holder supply to grow. We know that every day there are some amount of supply that's sitting around, lying dormant, waiting to graduate into being a long-term holder. That's true of some amount of supply always. But what we're looking at here with supply sideways, after we've gotten all-time highs and we're in this retractive, what I feel like is a bear market, we're seeing supply softened, and any maturation that's going on is completely negated by outflows from this group. I've been studying this recently and I have a theory, and it's related to this blue line down here. So this line represents the cost basis of long-term holders. This is the average price at which all coins on the ledger last moved, coins that belong to long-term holders specifically. So we've got their cost basis. And if you look back here in March of 2020, their cost basis was broken below. And for this like 1 week period or so right here, long-term holders were net in loss. The average cost basis of a hodler at that point was underwater. Well, over here in more recent times, now the first thing to mention about their cost basis is that it tends to move on a lag, because long-term holders by definition are people whose coins moved in the past. Their cost basis exists in the past. And so when new coins are joining long-term holder supply, their cost basis established months ago is being added and calculated into the existing cost basis of all the holders that are already in this group. So what happens after a big bull run, when many of these coins get transferred to a new owner and then go idle and they age? Well, 5 or 6 months later, they join long-term holder supply and their higher cost basis gets added to the group, and the cost basis of long-term holders finds itself rising about 5 or 6 months after the bull run. This is a natural base effect of being the cost basis of coins in the past. That's a logical process here. But what we're seeing on this front end of the curve, the line is now declining. So in some part, the cost basis of short-term holders will decline when you have a price decline that occurred 5 or 6 months in the past. It's partially tethered to price using the base effect I just described, where people's cost basis is getting added to the group and it's affecting the average. That's one way that their cost basis goes down. And that's more of a gradual effect. You can see that right here. This came after the 2018 bear. Like if I zoom out a little bit here, I'm going to put this at July of 2018 so you can see. Zoom out a little bit here. This cost basis line is declining a bit here in 2019, and this is really because of the bear market that we had just been coming out of. But over in the present time, you see this swift dropping of long-term holder cost basis. This is something different. And what I believe that this is are holders, newer long-term holders, people with coin from back here, maybe from the recent all-time high, because long-term holder cutoff is right around this point. It's right around early December. So people that have been holding from back here, maybe they've not built enough conviction, as they've not weathered an entire market cycle yet. Now seeing this price weakness, they're distributing. They're spending out of long-term holder supply from costs up here. They have higher cost bases. And so when they spend their coins and they give them to a new owner, that supply leaves this group. It leaves long-term holder supply and it becomes young again. So in effect, it causes long-term holder supply to lose members. People are leaving the group. That's why we see the flatness here. Also, it lowers the cost basis of the whole remaining group of hodlers, because some of their newer members that have a higher cost basis, whose entry price is more recent, those people are leaving the group. They're spending their coins, causing those lifespans to be reset back to zero. The coins become young again and they leave long-term holders. So we're looking at this dip, and these are the newest members of this mature group giving up and dumping their supply. And how can I confirm this? Well, we can look down here below at what is the 6-month hodl wave. So this is coins that are less than 6 months old. Coins from 0 all the way up to 6 months old as a percentage of the circulating supply. So the way that coins can become part of this group after not being in it before is to be spent. Coins joining this group are being spent out of maturity. And when they transact, their lifespan resets, as I mentioned a moment ago. It resets back to 0 and they start the aging process all over again. And when that occurs, they join this group down here. They leave long-term holder supply and they join this group of coins that's less than 6 months old. You see this rise? Well, here in recent times, look at the rise in this value. It dipped down to a low here in late January, and it's been rising since. Rising as the cost basis of long-term holders is dipping. In my assessment, friends, what I take this to mean, holders who are not quite mature enough that we can consider them strong hands, but they've weathered several months of volatility, are now finding themselves in a fearful place. They lack conviction and they're spending their coins to a new owner. Those coins are leaving long-term holder, becoming young young again and causing the cost basis of this group to fall. This is an interesting dynamic, and it does show a bit of weakness out of this hodler group, in part because, in my opinion, the market didn't give them time to reset. So in past bear markets, we've had this huge parabolic move, and then the drawdown is 70 or 80%, and people don't see their cost basis again for years. Well, instead of that scenario, what we got in 2021, we had a run up to an all-time high, we had a 50% drawdown, and then just a few months later, we were right back in those same price ranges again. We've discussed this dynamic before about how this second all-time high run happened at a point when the market wasn't fully reset. It hadn't prepared itself for another bull run. And so in a way, we got a lot of muted behavior out of holders on chain. And what I think now, after we see this weakness, this really painful crab market action after we have 250% corrections, it's causing some weakness, and some of these newer members of this holder class are bailing out. Now, I would like this group to show some more fortitude. Maybe we need to shake these people loose. I don't know how long that will take, or if maybe we reach a point where this effect starts to soften. That's possible. But in the short term, we have to acknowledge there is weakness among long-term holders, and they tend to be the more recent of this group. People who have transacted and acquired their coins sometime in the last 12 to 15 months, I would say. And one way that we can tell that those transacting on chain are not the older hodlers who have better profit margins is because we're not seeing big spikes here in net realized P&L. So this is a Z-score, which means that I've adjusted it for historical changes. And when we're looking at it here, you can see obviously there's a big spike of realized profits as we're breaking to all-time highs. Each of these triangles here represents a moment where we hit an all-time high profit taking, right? Second all-time high run, we hit a few peaks up here, some new highs, profits are taken. But over here on the back side, the last couple of months, this value is very choppy and it's close to the baseline. We see some small spikes up, small spikes down, net about break even. So this behavior, coupled with the dynamic we were just exploring with the long-term holder supply being flat while their cost basis falls, and we're seeing coins joining that 6-month group, all of that is telling me a story that these kind of medium-term hodlers, these people of maybe 6 to 15 months ago, that group is not fully convicted. We're seeing weakness out of them, and they may provide sell pressure if we are to see some kind of relief rally. So one final thing I'd like to touch on today is also on-chain related, and we're talking about exchange balances. So up here at the top, I've got the total balance of all exchanges in blue, and in the red line below are all of the exchanges minus Coinbase. So I took Coinbase out as a comparison because they are the largest Bitcoin exchange by holdings, and they have been for a long time. And when we've been looking at exchange balances over the last calendar year, not just myself, but everyone on Twitter who looks at this data has been talking about the perpetual decline in exchange balances. Now, it's a little hard to see on this chart because it's very zoomed out, but this value has been in a structural decline since March of 2020. That was the ultimate high for exchange balances. But something I've noticed is that while the aggregate trend of all balances is getting lower, if you take Coinbase out of the group, it isn't shrinking at nearly the same rate, and in fact has grown since November of 2020. Here's November of 2020. This is exchanges minus Coinbase, and it has actually seen some market share grow by about 100,000 Bitcoin, whereas the total balance, when you include the big dog, is declining. So what does that mean? Well, look down here. This is the rate of change of the two groups. So the dark line is the rate of change of Coinbase, and the red line is the rate of change of all the other exchanges put together. So look at this dynamic, guys. Here in the bull run, we're running up to all-time highs. We hit 40K, we pull back to 30, we rip up to 50. During that period, exchanges that were not Coinbase were seeing large inflows. You see these positive values, especially this big spike right here on the retrace, where Coinbase during that same period was losing Bitcoin out of its treasury. Its users were withdrawing coins. So we've got a bifurcation of the trend here, where Coinbase, the biggest dog in the room, was seeing outflows while everybody else was seeing net inflows as a group. And that's a pretty interesting dynamic because we've talked about this big surge of supply here at the retrace, here in April and early May, when price failed to get back over 59,000. This was the moment when there was a large surge of supply onto exchanges. You can see that in this spike right here and the rise in the total of exchanges here and the one below. But in the months following that period, we've seen kind of a chop around of the balances. But look at this movement on the dark blue line. Do you see these big square chunks? These are what I would consider institutional grade movements. These are huge block withdrawals taken off of Coinbase. And they're happening at a time when other exchanges are still seeing kind of mixed flows, outflows and then inflows. So we're seeing a decline in exchange balances. People on Twitter are reporting this with glee. Oh my gosh, we're at multi-year lows on exchange balances. Yes, that's true. And it seems to be led by Coinbase because when we look at the rest of the cohort, everybody else, they're basically flat and they're not telling the same story. So maybe we can break this out a little further. I think we should compare this to Binance. Well, here we are looking at Coinbase versus Binance. Binance is in yellow. Coinbase is in this dark blue. Look at Coinbase's balance. You see how it's been declining. This was the decline during the bull run that we talked about. You can see the effect of it down here, their rate of change. And in the last few months, do you see these chunks, this stepwise function of coins leaving the Coinbase treasury? You see that? In fact, I'm going to turn off my tooltip because it's a little annoying. Yes, check that out. See this stepwise function? These are these chunk outflows. This is what I'm calling institutional movement. And if I had to guess where I think these are going, I believe that these are probably larger players who are looking for custodial solutions external to Coinbase. Maybe they're going to Fireblocks. Maybe they're going to Copper, something along those lines, NYDIG. Who knows where they're going? But there are a lot of custodial solutions out there besides Coinbase. And in the last year or two, that business has really boomed. The industry has expanded. So these customers, in my estimation, are leaving Coinbase or they're just pulling them out for self-custody. And when we look down at Binance, look at their growth. They were growing throughout the bull run as Coinbase was declining. Now they finally reached a point where they're starting to see net outflows. It looks like it started right around here at the end of November, early December. Binance was still growing up to that point. They'd seen inflows, outflows, inflows, but the last few months, basically all of 2022, they've been net outflows, like the majority of exchanges. But I thought this was interesting, seeing how much closer Binance is to Coinbase now. And I think that sometime this year, it's plausible that they will take the throne and become the largest Bitcoin exchange by holding. They're also already the largest exchange by traded volume and by the amount of coins that they offer. As the ultimate crypto casino, it makes sense that they would eventually become the largest holder of Bitcoin, at least from an exchange perspective. So while we see a net shrinking of this balance, and we see a lot of people posting about it on Twitter, if you really dig into it, it's mostly just Coinbase. Whereas Binance has been actually gaining market share the entire last calendar year. And it's probably going to take over the top spot at some point soon, if I had to guess, just looking at how close these two lines are to flippening. So let's bring this all together. We talked about how Coinbase is losing market share specifically to Binance and soon may find itself the number 2 exchange by Bitcoin holdings. We also looked at the cost basis of long-term holders declining at the same time that supply is joining the 6-month and younger cohort, which signals to me that some of the quote-unquote mature investors that have joined long-term holder supply over the last few months are spending their coins out of fear and uncertainty rather than holding on to them. And they're negating growth in this group. So we are seeing a bit of weakness out of this group, and this population may provide some overhead pressure if we start to see positive price action because they might think it's their last chance to get out. So it's something to keep an eye on as we move forward. We also touched on this nice curl we're seeing in equities and in Bitcoin here as we open the week, but it's still far too early to get excited about this price action because when we look at where we are big picture, we're at range lows and still threatening a possible deviation lower. So it's what I've got my eye on today. And that's it. I'd like to keep this video nice and tidy, give you guys an idea what I'm looking at, and let you get back to your Monday. Make sure you're following me here on Twitter at TXMCTrades. I say this at the end of all my videos, and I hope that by now you are following me here. It's a great place to interact. I answer questions and post a lot of my thoughts as the market is playing out. If you have any feedback for me, if you have requests or comments about the content on this channel, make sure to leave it down below and I will check it out. And we will chat later this week. So until the next time, take care of yourselves, friends. Be kind to each other, and we will chat very soon. Cheers, everyone.